Good afternoon and welcome to the next in a series of joint webinars presented to you by Manchester Metropolitan University, the Institute of Chartered Bankers and the Institute of Accountants of England and Wales. The title of today's webinar is Sustainable Finance, Today or Tomorrow. Financial institutions can play a key role in advancing the sustainable finance agenda, as we know. Today, we're going to hear firsthand from our esteemed panel of experts about why green and sustainable finance is the future of finance. With COP26 just 9 months away and many financial institutions announcing net zero and other commitments, climate is clearly a focus for many. The panel will also seek to discuss other areas of environmental, economic and social sustainability too. Today, we have three fantastic speakers joining us. The first of our speakers is Emma Harvey. Emma's primary focus is on financing a net zero carbon environment and to keep the money flowing. She's part of a coalition for the energy efficiency of buildings, otherwise known as CEEB, which is established by the Green Finance Institute. CEEB's remit is assessing the market for energy efficiency improvements across the UK and identifying initiatives where finance and governments can bridge investment gaps. Following Emma, we have David Gorman. David is head of research at Castlefield Investment Partners and an employee-owned investments management company based in central Manchester. Castlefield employs around 60 staff and specialises in ESG investing. David has an MA Honours in English from the University in Aberdeen, an MBA from Alliance Manchester Business School. He has nearly 25 years experience in the investment industry. David is former president and vice president of the Manchester District branch of the Chartered Institute for Securities and Investments. He also sits on the Investor Advisory Group for the Financial Reporting Council. And last, but obviously not least, Ian Claverdon. When not composing musical masterpieces, Ian is a senior lecturer at the Banking and Finance at Manchester Metropolitan University. With one of his specially assessed subject areas being ethics and sustainability in finance, Ian has over 30 years experience in the banking industry, ranging from branch and business relationship management to change management and learning and development strategy. After the three presentations, we'll move to a Q&A session. So please pop your questions in the chat box and we'll do our best to answer those questions for you. So without further delay, I'm going to hand you over to Emma Harvey. Thanks, Emma.
Thank you, Justin. It's a real pleasure to be here today. Before moving into the world of green finance, which is obviously the key topic we're going to discuss today, I want to take a step back and have a look at really where the challenge of green finance has been to date. And this is based in the long-held belief that economic growth could only be achieved with growing carbon emissions. And for many years, economic and environmental ministers really struggled to actually deliver action on the environment because of that long-held, deep entrenched belief. But in 2015, we saw the historic signing of the Paris Agreement, which saw nearly every nation in the world commit to net zero and limiting global temperature rise to 1.5 degrees by 2050. And what this growing political buy-in for tackling climate change has done is it's trickled down into the public sphere and into the business sector. 2019 and 2020 were really high watermarks for climate activism, from Greta Thunberg and Extinction Rebellion to the Build Back Better campaigns that we're seeing off the back of the pandemic. We really are starting to hear a call for action from business, from the public and from policymakers. But if we have any hope of getting the over $9 trillion that's estimated to try and decarbonize our economy, we're going to need more than policy and we're going to need more than political and public activism. We're going to need the power of the markets. And this is where finance plays such a critical role. So for the last 10 years, we've seen the emergence of the so-called green finance market. I think I'll just take a step back and say, what do we mean by green finance? So green finance can be viewed in two lights. One is greening finance, and the other is financing green. Now, it sounds like semantics, but it's a very important distinction. Greening finance is all around risk, disclosure, reporting, and transparency across the finance system, ensuring that financial institutions are appropriately managing the risks from the transition to a net zero economy. And this was really triggered and accelerated by the TCFD, the recommendations from the Task Force for Climate-Related Financial Disclosures. On the other side of the coin, you have financing green, which is all around getting money to move towards real economy outcomes. This focuses on financial product innovation, collaboration across sectors that previously haven't been related, and also on educating and informing not only customers and businesses, but also bankers themselves. And financing green is where the Green Finance Institute predominantly plays. So just a quick potted history on the Green Finance Institute. We were set up in the summer of 2019 and initially seed funded by the UK government and the City of London Corporation. We sit in this really interesting position between the public and private sectors with our government funders, but everybody at the Institute has had experience within banking at the sharp end of making deals. And that really helps us with our mission, which is to try and mainstream green finance, both in the UK and internationally. How do we try and achieve that? Well, we try and achieve it by stimulating and catalyzing product innovation and collaboration through a series of coalitions that focus on particular end sectors of the economy, so the built environment, decarbonisation of road transport and nature-based solutions. And we bring together a breadth of stakeholders from finance, from business, academia, civil society and government to identify the barriers to investment into decarbonising those sectors, and then to collaboratively develop and bring to market the financial mechanisms that can help to overcome those barriers. I'll give an example from our Coalition for the Energy Efficiency of Buildings, or the CEEB, as it's affectionately known. This came together in December 2019 and has now grown to a collaboration of over 300 individual members. We have explored the residential housing market to try and understand what is stopping people from investing into retrofitting their homes and installing zero carbon heating solutions. We published 2 reports last year that showed our analysis, but more importantly, off the back of that analysis, we have designed a portfolio of financial mechanisms, over 30 of them, that can help unblock the barriers to investment flows. And for the last 6 months and into 2021 and beyond, we are actively working with the finance sector to bring these solutions to market. Now, what can some of these solutions look like? Well, we've drawn from international successes. So we are exploring whether property assessed clean energy finance, or PACE finance, can be translated from the US into the UK. This can help homeowners to retrofit their properties by funding up to 100% of the costs of a project, repaying the financing over an extended time frame, we're talking 25, 30 years. But importantly, the finance is linked to the property rather than the property owner. So if a homeowner decides to move, the financing doesn't move with them, it's whoever is benefiting from the energy efficiency measures who repays them. We're also exploring green ISAs and how we can stimulate that market in the UK and pivot the over £600 billion invested in ISAs towards greener purposes. We're also exploring enablers of finance. We recently published a report on building renovation passports, which are like an MOT for a building. It shows how your property is performing today and how it will perform in the future. And we're also developing things such as green rental agreements, which are rental agreements that fairly distribute energy savings between landlords and tenants. So trying to break down those embedded split incentives in the sector. That's an example of what our Buildings Coalition is doing. But as I mentioned, we are soon to launch a coalition on decarbonising road transport. We also work very closely with the UK government on a number of projects that they're exploring. And I think that brings me to sort of some of the key messages I'll take away from green finance. In order for green finance to really take off in the UK, we need collaboration across sectors that were previously unrelated. We need to bring finance, policymakers, and businesses together to develop solutions in collaboration. We need to explore innovative new financing mechanisms. We need to start blending public and private finance together in a way that makes returns attractive to the private sector and efficiently leverages any public capital. And finally, coming back to the point I mentioned earlier, is around education. It's around getting information, useful information, into the hands of consumers, into the hands of businesses, and into the hands of financiers, so that they can be informed and they can take actions that will reduce their risk and exposure to climate change, but also grab the opportunities that the net zero transition presents. So that's what I was going to say today, and I'll pass back to Justin.
Wow, thanks, Emma. Really interesting. So next to speak for us now is David Gorman. Thanks, David.
Thank you, Justin. Yes, hello, I'm David Gorman. I'm head of research at Castlefield Investment Partners. In order to sort of talk about the subject that we want to discuss today, I'll backtrack a bit as to some sort of history of Castlefield, so that you can understand how we've got to where we are now. So the business was founded in 2002 as a small fund management house with a client base of predominantly charities, and they still form a significant part of our client base. We still have over 70 charity clients, and so that's always informed our ethos in terms of our investment strategy. So we have some of the clients might be church-related organisations or school trusts or other bodies of that nature. We have about 60 staff, as Justin mentioned in this introduction. The business has grown quite rapidly over recent years. We run a range of sustainable investment funds. We manage, on my side of the business, we manage about £300 million altogether, so a fairly small amount, but the vast majority of it is focused on sustainable investment in the wider sense, not necessarily just green investment, although we do have quite a bit of that, which I'll come on to. So we pursue an investment process which is best summed up by the acronym BEST, as in George. So B is for business, E is for environmental, S is for social, and T is for transparency, which is really the translates across to the G of governance. So it looks at the way that the company that we invest in discloses its information. So that's one of the screens that we use to look at our investment, potential investments and current investments. So the process really is one where we start off by looking at the numbers. Does it stack up as a financial investment? But then a second screen is the more qualitative element of, does it meet our requirements in terms of investment process along the four characteristics I've just mentioned. We employ a two-prong approach, really. One of which is to talk about negative screening, which sounds negative, but it basically says you say no to certain areas. So, for example, we don't invest in oil and gas companies. We don't invest in companies that derive a large amount of revenue from defence, such as BAE Systems, for example. We don't invest in alcohol producers. What tends to happen within our company and within the wider investment industry is there are usually thresholds with regard to negative screening where you might allow a company to derive, let's say, up to 10% of its revenue from areas such as tobacco or alcohol. So it allows us to invest in a supermarket like Morrison's, but doesn't allow us to invest in something like Diageo, which purely produces alcohol, on the basis that Morrison's does many other things as well as selling alcohol. So that's really the way the negative screening works. There are other areas are sort of in pornography and book betting, etc. We don't allocate funds to companies that are involved in those areas. We then, once we've sort of excluded a lot of companies via this negative screening, we then look at what we might call positive screening, where we are looking to encourage certain areas of investment and certain businesses who are pursuing newer, more ecological and greener ways of doing things. So, for example, we have companies that are involved in the most obvious ones are green energy. So, companies that invest in wind turbines, companies that invest in solar. A new area for us is companies that invest in battery storage, which is not just what Tesla. It's the last mile sort of delivery and storage of power, because obviously wind turbines provide an intermittent source of power, and solar the same. And so the storage acts as a vital element between the actual sources of the energy and the distribution of it to the householder or to industry. So they're areas that we look at, but we're also looking at areas such as positive initiatives in healthcare, animal healthcare. We invest in a company that replaces antibiotics in animal feed with probiotics, a bit like the kind of Yakult thing that you might drink in the morning. So it's those things where companies are trying to do things a little bit better than the old way, that we seek to encourage. Moving more widely away from sort of green finance, more of we obviously look at things like corporate governance, diversity, and these other areas of ESG investing that have become so prevalent. We've been doing it about 9 or 10 years, so we're pleased to see it become much more widespread. And we're sort of continuing to focus on it. On a personal level, I'm involved with as you said, just in the Financial Reporting Council, the FRC, which is one of the regulatory bodies of the finance and investment industry, along with the FCA. The FRC has regulatory powers in areas such as audit, but it also has powers of recommendation in other areas. So they supervise and manage the corporate governance code that listed companies must adhere to, and also the stewardship code, which is an area that we're involved in, which talks about the way that asset managers like ourselves act as stewards of our assets and manage client assets correctly. So they're the areas we're interested in and keen to pursue. So I've been in the industry a long time, 25 years, as you say. So I've seen a few fashions come and go in that time, but I don't think ESG or green finance is a fashion. I think it's certainly here to stay, and it's something that we should embrace.
Excellent. Thank you, David. Ian, over to you.
Yeah, thanks very much, Justin, and thanks to Emma and David. I class you two guys really on the front line of all of this, and being very close to that going on. For myself, as Justin mentioned before, I'm actually in the third year at Manchester Metropolitan University as a lecturer, but I worked for over 30 years in Lloyds Banking Group, so sort of seen how things have developed within that time within Lloyds. But I suppose as taking the tutor role in all of this, I read the question, what was the title today? So it's sustainable finance today or tomorrow. So telling all our students to make sure that you're focusing on the question. And I thought I better do that myself, because I know there's some students on here. And my simple answer, and probably quite controversial to this, is, well, why wasn't it yesterday? Why didn't we have plans in place? Well, actually, we've had loads of plans in place. You can go back decades. I mean, one of the first big sustainable pieces of work was what was called the Brundtland Report in 1987. And that said, basically, we can see climate change. We can see that the ice caps are melting. What do we need to do about it? That led to 1992. There was an Earth Summit in Rio, which said, again, but we need to do, it was called sort of Action 21, Agenda 21, that said about the 21st century, we need to have put tackled this and get a plan in there. John Elkington, whose work I'm a big fan of, 1997, he came up with what was called a triple bottom line, which again still lives to this day. And very simply what he said was businesses need to focus on three things: profit, people, and planet. Okay, with the planet being something that was really at the bottom of the list and needs to be equal. Not saying that that needs to be above profit by any means. You then go 2000 Millennium Summit we had, thinking about Millennium Development Goals. There were 8 of them. 2015, we had the Paris Summit, which we, the Climate Change Summit, which we've heard, and we've got COP21, as Emma referred to, coming up later this year. And that set up 17 Sustainable Development Goals with the United Nations. So every time, why have we not actually got somewhere and we've effectively changed our strategy? That's the sort of key thing I think it's good to think about. Well, for me, one of the big game changers in all of this was, and how you try and get the planet and the people side, because it's not just about, we talk about green, but we've got to think about human rights and everything and how companies approach in what they do. Big changer for me was the global financial crisis. So straight away, banks, as we all know, had a massive image problem. And one of the key things, and I lived and breathed this within Lloyds, was that we had to try and get our image better somehow. And that's where the phrase corporate social responsibility really came into play, because it was saying, well, actually, what can we do as businesses to not only improve our own image, but also be able to ensure that we're giving something back. So just in my own personal experience, we used to get a couple of days a year where we go out painting community centres, tidying up National Trust gardens, that type of thing that we do as an organisation. But that then triggered off, you think of the likes of building on that with Sir David Attenborough, Greta Thunberg that Emma's mentioned, and that really has seen a groundswell in seriousness and taking this very, very seriously. So that's a little bit where that's come from in the past. You've also had regulators, of course, who said we need to make sure liquidity and capital adequacy of financial institutions and the bank is right. But actually what's developed from that is the actual stress testing on climate change. So one of the key things, the Prudential Regulation Authority, part of the Bank of England, currently do annual stress tests, or they ask banks to do annual stress tests, and they'll go and check, well, are you solvent enough to keep going should there be an issue? COVID, for example. Well, the banks have had a very clean bill of health in terms of their liquidity and the capital levels throughout this particular period. But there's also, and you might not be as aware of it, there's a biannual stress test on climate change, and it looks at carbon, it looks at emissions, and it looks at temperature change. It takes in 3 things. That happens every odd year, so it's due this year. And surprise, surprise, COP26 will probably put a little bit more focus on that going forward. So you've got those stress tests, in terms of today. Last week, two major things happened. So we had the IFRS Foundation. They're a non-profit organisation that works on the accounting standards side, but they've put I can never say it, Sustainability Standards Board. They said that they're on track to get that in place in time for COP26. So COP26 is really, I think, going to be a major game changer in terms of driving these things. You've also got from the EU last week, I think it was on last Wednesday actually, had what was called the Sustainable Finance Disclosure regulations. And that's saying that financial companies and also the big investors that operate in Europe really need to flag any issues that they see on ESG and how they're dealing with that. We had Aviva the other few weeks ago who said that they are reviewing their portfolio, and anyone who can't demonstrate in a couple of years that they are taking this seriously, in effect, they'll take the funds away from them, because they're one of the biggest pension fund managers that we see. We had Donald Trump who said, before he left office, he passed a motion and legislation to dissuade pension fund managers from actually following the ESG strategies. Joe Biden's overturned that. So again, big things that we're seeing. So there's some of the things that's happening today, but I think finally from me, what about tomorrow is the key part here. Well, Emma and David have got, right in the firing line of that, and we've heard some great things. For me, in terms of financial institutions and banking, I think the future is open finance. We haven't got enough time to go into that today, but effectively with new fintech companies starting up, we've got new banks. So think of the likes of Monzo and Starling, who have started afresh and they can be very reactive and agile in terms of their the change in the technology that they can do. One of the key things that open finance does, it will allow us to see as consumers, we can see our pension fund if we need to in an app, if we've given permission to do so. If we have an investment portfolio, we'll be able to see the breakdown of where that is, and also, the possibilities of linking into, say, how green are those investments. Generally speaking, as David will know, we're often reliant on reports from, if you have an investment portfolio, we're in the quarterly reports that customers get and clients get. That may be at our fingertips a little bit more in the future. There's that. It might even tell us, and it could go to the level that you buy your coffee in Starbucks or Costa and actually find out where the coffee is sourced. That sort of data in the future is definitely available to get that. I'm not saying that we then go and get our coffee from the, the sunny peaks of the Peak District instead of Costa Rica or something like that. But you see what I mean? If the more it's available to us to be able to see what we can do, and if fintechs and that sort of financial ecosystem work together to ensure that we're doing this for the greater good, green finance can be absolutely upfront. The ethical and social and governance side of things, the best things, as David said, can really be in front of us. So we've got the ability to control that and influence that in the future.
Nearly had to say it then, didn't you? Everyone was screaming he's on mute. Thanks, Ian. That was really good. So it's question and answer time. We've had a question come in already, and the question is from Shashila Cox, and the question is for Emma. All the actions you have described are very admirable, but the United Nations tells us that net zero by 2050 is 20 years too late, and we're running out of time to stop not only climate change becoming irreversible, but also temperature increases from becoming exponential, such that we are threatened with extinction. So, are your actions aiming for net zero by 2050, or do you aim for a far better than this?
Very good question. And I think this is where I'd say that finance is the enabler of what policymakers and industry want to try and achieve. So I think, financial institutions themselves have made commitments about the amount that they want to invest towards net zero activities in the next 10, 20 years. And as you say, the science is pointing out, that we do need to act rapidly. And the UK Climate Change Committee's 6th carbon budget did say that, there is a balanced pathway to get to net zero by 2050, but it is going to require radical action, and it is going to require radical investment. I mainly work with the built environment, so I know, for the UK to decarbonise its commercial and residential buildings, it's going to cost over £360 billion of investment. And so clearly that cannot be financed by the public purse itself. That's why we really do need to work with the private sector to encourage investment into the space. So that is why I say private finance and public finance is the enabler of these actions, but it really does need a concerted effort across all sectors in order to actually achieve that goal. And as you say, avoid a climate catastrophe in time.
Thanks, Emma. I don't know if either of the panelists would like to expand on that, or?
I think we're seeing, from a investor's perspective, I think we're seeing a lot more companies led inevitably by the big companies making commitments to 2030 rather than necessarily 2050, which does seem a long way off. So it has risen up the corporate agenda. Just picking up on a point that Ian made earlier, I think one of the things that investors and companies see, climate has just become a much higher up the risk hierarchy, really. So from investors, you see it as, if we all remember BP and the oil spill and various other things. So it's this concept of climate as investment risk that's really become much more prevalent, and rightly so. So that's why people like the PRA and the Bank of England, the FCA, are picking up much more on this because of the the problems if we don't do anything about this. So it is a much more of seen as much more of a risk now.
Yeah, I would back that up. Absolutely. I think the point that I was saying for the future, and how we do that, because I mean, Shashila's your question there is, well, it almost echoes back to the start of my bit. Well, why haven't we done things that we said we'd do in the 80s and 90s, for example? I think we've got a great opportunity with the likes of open finance and new technology and fintech companies. There was a Khalifa report that was released a couple of weeks ago that looks at the future of fintech, because basically the UK wants to be a world leader, particularly in that side of things, particularly now we're out of the EU side of things. But there was no mention of how sustainability and green finance can be built into that, which I found quite disappointing, really. But the companies have got this opportunity if they work with the Standards Board, the COP26 driving, Sir David Attenborough, all of those can bring this together and keep the profile there. It can definitely make a difference. It's all about openness and transparency.
Thanks. I keep hearing a term called greenwashing. What is greenwashing? Who'd like to have a crack at that one?
I don't mind having a go.
Hi, thanks.
I think it was interesting. I was on an event quite recently, and we were saying, the definition of net zero carbon is hotly contested, and I think the definition of greenwashing is probably another one that is hotly contested. But in short, it's when organisations, financial institutions, businesses say that they are doing something that is green, net zero, etc. But actually, when you look under the bonnet, it's not. There was quite a couple of classic examples a couple of years ago where you had mining companies maybe issuing green bonds, saying that they were going to use the proceeds of those bonds to invest in more efficient mining processes. Now, admirable that they're trying to reduce their emissions that way, but overall, their business model is contributing towards climate emissions. But I think there's something that has led, though, to quite an interesting other trend in the sector, which is around transition financing. Because if you do have these oil and gas majors, these aviation companies, etc., who are emitting emissions, and quite frankly, if some people will say you cannot ultimately get rid of them entirely, how can you help them reduce their carbon emissions as much as you can? And that's where transition finance comes in, which is trying to help pivot and decrease the emissions of these carbon intensive businesses that are just going to have to stay around for the future. And so we're seeing we know that the ICMA are developing the transition bond principles. And we've also started to see increasingly something which we call sustainability linked finance, which is where we see small incentives in pricing offered to companies that meet particular sustainability ambitions. Now, these can be related to the environment. They can also be related more to some of the social aspects, which David touched on as well. So I think greenwashing is a really critical area, and we need to prevent greenwashing to the greatest extent possible. But we're also starting to see innovation in the sector to help those more carbon intensive businesses.
Thanks, Emma. One thing that sticks out with me is that there's been a lot of news coverage at the moment on particularly where I live in the world, which is sort of northern Lancashire and South Lake. So there's obviously a discussion taking place at the moment about a coal mine that is being looked at, and whether or not that should be given approval. I mean, surely that's typical of the conversation that we're having, isn't it? I mean, the argument for it is that by producing the coke that they'll produce from there, it will fire the steel that we need in order to maintain productivity in this country, and it prevents it being shipped in thousands of miles across the oceans in giant ships and all the rest of it. But at the same time, it is producing it's producing a product that is essentially that everything that we're trying to do in trying to stop carbonization. So where does something like that fit? I mean, that's incredibly difficult, isn't it?
It is, and I probably wouldn't want to. It's on my pay grade to make that decision. But what another thing that we have seen in the sector, though, is a number of organisations emerged that provide advice and services around defining what is green. So you've got the likes of Video Areas and Sustainalytics and FTSE for Good. Interesting trend as well is that we've seen the majority of these organisations be bought up by the credit rating agencies, which shows you a little bit of a trend towards, we're seeing credit ratings start to take into account ESG factors. And so you're starting to, is this acquisition of these companies potentially signalling that down the line, your credit fundamentals are going to be defined by your sustainability performance?
Okay, we have got questions coming in thick and fast at the moment, so I'm going to go to the chat for this one, and this is from Vasilisa. This is there's a lot of focus today on climate change, and rightly so. What are your views on biodiversity loss, and what should be done to address issues there? Ian, shall I start? Can I come to you for a view on that one?
Yeah, I think in terms of biodiversity, it can take in a number of different things. If we say that, I think if we take climate change as a whole, I think one of the great things to see is the publicity that we see from the likes of Sir David Attenborough, Greta Thunberg, and that right or wrongly is driving the intensity. We've had the Extinction Rebellion protests. Well, protests will be illegal now as the way things are going, or it seems that way. But the key thing is, how do we keep that and then transfer it into the workplace? I think one of the key things for me is, whether it is biodiversity, climate change, and so on, the way of actually addressing these issues, it has to be in the values of a company. And when you have, if you go on a website of a company, some of our students will know, if you're researching for jobs and placements and the like, you look at the mission statement, you look at the values. And again, in my experience in Lloyd's, there's one thing is being told by the C-suite and your CEO, these are our 3 strap lines and this is what we're going to do. The other thing is actually getting the staff to interpret and what that means. So bringing that to life. And I think the more we start asking that, and as we get new colleagues and new blood going through larger organizations, what we'll find is, if we ask that question, then that will become a natural behavior. And by thinking about how we treat people, how we deal with the climate and the economy in general, is going to make a big difference. So in simple terms, I think it has to be the mission statement of the company. And that, David, you mentioned BP and Shell, for the same. I mean, they've got massive uphill task. I mean, there's lots of publicity going on at the moment to say, we are going green. And you think, well, if they'd never use British Petroleum anymore, it's BP, but it stands for petrol, which of course goes against what we're talking about today. So how will they transform? How will they go in the future? It has to be accepted by everybody to do that. I don't know if that's hopefully touches on the question, an answer to the question.
That's great, Ian, and actually it segues in beautifully to Helen Ritson's question, which I'll aim towards David. How do we incorporate the carbon footprint data in our business decision, please, if the data is not available or not fairly captured at the moment?
Yeah, it's an interesting one. It tends to, we as investors, we invest in companies sort of mainly UK and across the piece in terms of market cap scale, from FTSE 100 to AIM and micro cap companies. Obviously, the bigger companies have much greater resources and there's a lot more emphasis on carbon footprinting, etc. And pick up on what Emma said, there's now a lot more bodies out there who will audit and assure companies. It's obviously a brand new area for the big accountancy firms, for example, will audit and assure your carbon footprint. A lot more institutional investors, of which we're one, albeit a very small one, are starting to measure the carbon footprint and carbon emissions of portfolios as well. But often it's a case of, is the data available from all your investee companies? And I think we're still on that journey of getting all that information at the moment. So if you go for a FTSE 100 company, yes, they've got it because they have the people to do it and they've done all the work. But if you're running a small cap fund, you probably haven't got, the companies do their own investor relations, for example, so they don't necessarily got the wherewithal and the resources to do a detailed analysis on carbon footprinting. It's so in summary, it's kind of coming, but it's not there yet completely.
Interesting, thank you very much. One of our anonymous attendees has asked a question, which is probably one for you, Emma. Is there a register of organisations who are qualified to make assessments of commercial or domestic buildings along the lines you mentioned earlier, such as green passports?
So building renovation passports have not been launched on scale or en masse in the UK, although just last week, Santander and Halifax both launched home energy reports that can help their mortgage customers understand how their property is performing today and the steps they can take to renovate. But we have seen the government and industry recognise the need to build trust amongst homeowners in the people who are going to be installing and renovating their properties. So we've seen something, it's quite technical, it's called PAS 2035 came out, which defined new retrofit coordinators and retrofit assessor roles. And there is also the Trustmark organisation, which is a government endorsed quality scheme for retrofit installers, which is again a relatively good trusted source to go and find information about this from. So I'd recommend going to some of those sources to try and understand some of the additional information and support you can use to retrofit your properties.
Excellent, thank you. Ian, if nuclear power is still considered green technology, they have huge capital costs and long lead times. What would you say is the best way to finance them?
I think it's down to, well, a number of ways. I mean, it's obviously a big industry, so therefore it needs your corporate divisions of the banks, for example, to get involved in that. So that's probably the way forward, but there's this great opportunity not just to look at it as a lending proposition and what return you're going to get on something, then what is actually the sort of the ecological return. So what's the benefit of doing that? I think you touched on the point, Justin, regarding the coal mine situation in Cumbria, and you're not that far from Sellafield as well. Is that balance? It's such a difficult argument to look at, but in terms of the finance aspect, I really do think it's down to the banks to look at it from an ecological return. So, give you an example. I mean, the old school of pre-credit scoring, when we used to look at lending assessments, you looked at the customer, you looked at the proposition, you had various bits, as chartered bankers will know in this, and you had like a traffic light, red, amber, green for each of the categories you'd look at to. In that, none of that at that stage looked at, well, what's the ecological impact? What's the climate change impact and so on. That feels like it needs to be in that sort of consideration. And we'll see going forward that any company, nuclear company, for example, that wants to borrow, will need in its reports, in its annual reports, to say what it's doing in terms of making sure that they are being sustainable. So I think it's paying attention to what companies are doing, both at the interview, an application for finance, but also perhaps even putting an annual covenant in there to say, this is the ecological target that you're aiming for, because it's long-term finance when you're looking at nuclear.
Excellent, thank you. I've got a couple of other questions here that I can ask, it's okay. So how do we mainstream sustainable finance, and what progress have we made so far? Does anyone want to have a go at that one?
I'll chip in on that one if I may,
yeah.
Very briefly. It probably goes back to what I said initially, is that, if we've got standards and boards saying that in annual reports, we need to make sure that we've got a section that is saying this is what we're doing about it. And, if that's a regulatory requirement, then that's going to make a huge difference. And we're not just really talking about, the BPs and Shells and so on. We're talking about small businesses. What stage, at what turnover level of a business do we need to ensure that's in there? And equally, to make it embedded then in terms of banks and their support, in relationship, you're talking about, well, what's your expansion plans? Building that question about, well, what are your sustainable plans for the future? That's
you could be building that into the audit reports and so forth, couldn't you?
Absolutely. And it is, that is happening. And I think we'll see from the likes of the IFRS Foundation that sort of launched it last week, if we can make that across the board, then that is going to make a big difference.
I'd love to come off the back of that. Completely agree with what Ian's saying around embedding sustainability metrics and analysis into both lending and equity decisions. We saw the equity market move first in trying to push for sustainability, but there was a huge opportunity with the debt capital markets, the syndicated loan markets, coming right down to business banking markets as well. And previously when I was at one of the major high street banks, they were increasingly asking credit analysts to explore those metrics. We're also seeing, though, there was a conversation earlier around here, there's a challenge around accessing information and data to make these decisions. Well, back in last November, the Chancellor announced a number of different measures that are going to try and help embed green and sustainability into our economy. One is around mandating organisations to adopt the recommendations from the TCFD, the Task Force for Climate-Related Financial Disclosure, which will see all businesses having to disclose on the climate-related risks. And we're seeing now on the biodiversity question, we're seeing the Task Force for Nature-Related risk disclosure is coming forward, and our chief executive at the Green Finance Institute is one of the co-chairs there. We're also seeing the UK start to develop a UK green and sustainability taxonomy, building and adapting on what the EU Sustainable Finance Action Plan developed. But I think we've been talking a lot around the risk and understanding those risks, etc. But I think there is the flip side to embed green finance into everyday finance, because we don't want it to be this subset. Ultimately, we want all finance to take this into consideration. We do need to tap into the commercial opportunities. Banks and financial institutions and investors are businesses that need to make a return. So how can we structure new financial products that do environmental good, incentivize positive real economy outcomes, and still deliver attractive commercial returns to banks? And this is where I come back to my point around blended finance. How can we use public funds to, for instance, provide guarantees that will de-risk transactions, provide cornerstone investment that will attract in other investors, or other interesting financing mechanisms, which we mentioned a number of them in the Green Finance Institute's various reports. I think that is critical for helping to pump prime the market, demonstrate and drive demand, and therefore lead to much more sustainable markets in this space.
Brilliant, thank you.
I think just to add something there,
Yeah.
just a couple of things. One is, I think we're seeing a big change in investor mindset as this is kind of generational transition of wealth from old codgers of my age to the younger people who probably have a different mindset in terms of green finance and green issues. As they become the stewards of this wealth, I think it will gain more and more traction. I think the other thing is probably, and referring on to what when we talked about COP26, is political will, both at national level and at international level. That there has to be the political will to push this through, and I think we're seeing a bit more of that now, as Emma referred to. But it needs to be, what we want to see at COP26 is agreements being struck and agreements being stuck to. I think they're the two things I'd like to see there. Is it's all very well making the commitment, but then 5 years down the line, people haven't stuck to it. China perhaps being the most obvious candidate for that one, but that's another discussion. So I think the two things, investor mindset and political will, are the ones that will help mainstream these things.
You just mentioned what would you like to see from COP26? So I'd throw that over to Ian and Emma. What would you most like to see as some of the outcomes that come from COP26?
So on my side, I think, mirroring what David said, commitments being stuck to. But I would love to see the UK showcase some of the innovation that has been led out of this out of this space, whether it's the Bank of England embedding climate stress tests into their regular stress testing of financial institutions, whether it's innovative new financial products that are being developed by, amongst others, the Green Finance Institute, and also the leadership in the greening finance space. So the fact that we are making TCFD mandatory, the fact that we are we've just announced the National Infrastructure Bank, which is going to have a very strong green remit. So I think COP26 is going to provide a very strong platform for demonstrating global leadership and helping bring other countries on the journey.
Ian, you seem to be nodding in agreement with a lot of that.
Yeah, that's it. Probably took the words out of my mouth there, Emma. I think I totally agree. I think if two simple answers that I would like to see in addition to that is top down and bottom up. So the top down bit with the regulators actually saying, well, for example, the PRA, Prudential Regulation Authority, as I said, does a biannual climate change stress test on banks, but it does an annual one on the financial side. Well, why aren't they both annual? Probably giving the exec a bit more work. But if it's that important that the planet is the same as profit, then why aren't they both annual reports, for example? So driving that down will give the sort of the executive level that sort of focus. But there's the bottom up bit as well. So, we've got lots of great students and, young people joining that. They're the future. I'll join David in the old codger side of things myself, in that, we're not going to be around forever. And, we've got people replacing us. The institutions will still be here. So it's got to be owned by everybody, not just a suggestion from the top.
Yeah, I think from my own perspective, the main thing that they've got to be able to do is to deliver trust in what they are saying that they're going to do, because far too often we've heard so many different promises and lots of headlines and lots of rhetoric and very little in terms of delivery. So if particularly some of the younger people that are on this webinar today, if they want to take this forward and to trust in what people are saying and to buy into all this, then we have to feel as though we can trust in what people are saying. I've got Jerry Mullen has just asked us a quick question. Ian spoke about ensuring corporates comment on their sustainability credentials in their annual reports. How do we bridge the gap between overall general goals, which can be sweeping, and getting to the detail of what actions these companies are taking? How do we make it real and easily understandable?
Well, perhaps if that was mentioned in mine briefly, I think it is that bottom-up approach. I think it's everybody having a say, and that includes us. I'm sort of pointing the finger at regulators and pointing the finger at employees of organisations, but we've all got a job to do ourselves. And if it's all on everybody's agenda, I know it's easy to say, but we need to find a way of doing that, and having the media and the publicity to make that in very conscious rather than it being subconscious is very important. And
let's not forget that everybody, or most people on this call, will have an amount of capital behind them, whether it's your pension, your savings. And I'd really recommend everyone to have a look at the Make My Money Matter campaign, which is pushing for you, me, anyone who has a pension to speak with their asset manager, understand where their pension is invested, and encourage their pension fund to pivot their investments towards green. You have a very strong voice in this, and speaking to your banks, to your pension funds, to your investment advisors is a really tangible way that you can actually take some action as well.
Thanks, Emma.
I think just picking up on the corporate reporting point, it is with regard to climate commitments, I said, it is getting quite a bit better, I would say. And companies are now having in their annual report, there's usually a 10-12 page section on sustainability, and they do set tangible goals and measure themselves against them. So it is improving. It's not there yet, but it's better than it was.
Excellent. We've got just a couple more questions that have come in. We've got 6 or 7 minutes left. This is from anonymous attendee. This is a question for Ian. In many universities and business schools, sustainable finance is often treated as a separate degree program. Is it time to bring sustainable finance into mainstream business and finance programs to a greater extent? It's a good question.
Yes.
Yeah.
It's as simple as that.
It's a simple answer.
Yeah, we've done that. I mean, for example, in the banking and finance and accounting and finance degrees plug that we do at Manchester Metropolitan University, and the master's units as well, fintech and finance, we have sustainability and ethics as well. So, the starting point really is ethics in terms of understanding the theory and how they've grown over years. And then that can be, well, actually, what is right and what is wrong, what's good and what's bad, how does that link into protecting our planet and the likes. So it's absolutely, we have built that into what we do. Obviously can't speak for everybody, but I don't think it will be long that most universities will have this embedded rather than it being a separate topic.
Brilliant, thank you.
Sorry, I was just going to add as well, I think it's fantastic to see that MMU have done that. Can we not also take it further and embed this into A-level and GCSE business studies? We know that the younger generations are so much more engaged on this. So why can we not have a sustainable finance module within business studies, or even sustainable finance qualifications? We have a very young team here at the Green Finance Institute, and the sort of the passion and energy that's brought through that is fantastic. So I'd say, get more people into this sector.
A really good point, Emma. We've had a question come in from anonymous attendee. He's obviously very busy writing questions to us today. It says, I'm the finance manager of a small charity operating in the UK with a building from which we operate. Where would you start in trying to improve corporate green credentials? Where are the biggest fixes to start with?
I don't know whether this relates. I'm no expert on building, so I can't talk about that. But I think probably if you establish that, I'm sure the Charities Commission or something similar would have a set of some guidance that you could work with to start off, to try and sort of measure yourself against and perhaps do some goal setting for the following year. So that's probably where I would start in the particular regard of, let's say, your constitution as an organisation.
Okay, excellent. What are the two bodies Emma mentioned in her earlier answer, please, with regard to the qualified assessors and commercial or domestic buildings, i.e. green passports?
Oh, so the organisations that I mentioned.
Yes.
So one is well, Trustmark provides a quality regime for retrofit installers, but the two financial institutions that have recently launched building passports, in effect, it was Halifax and Santander.
Brilliant, thank you. We've got a couple of minutes left, and I just want to, I know that obviously this has been put on by Manchester Metropolitan University today, and a big thank you to all the fantastic work that they've been doing to get these series of questions up and online. So with that, I just want to ask a couple of skills and careers questions, if you don't mind. And this is open to everybody that's on the panel. Does green and sustainable finance make banking, and I'll say and accountancy, more attractive career for young people again? Does this cover all aspects and purpose of banking? Ian?
Yeah, well, I'll start that. I don't think we're there with it yet. Because you think that the image, I'll give you an example. When a lot of first year students come to me, I'll say, well, what are you planning to do? What are your aims? The most common one I get is investment banker. And that is, why do you want to do that? Well, there's good money in it, and so on. That's the first answer. It's the profit aspect that comes into it. I totally get it, because that you want to be successful and do everything else. We're not there. We need this embedding of understanding ethics and sustainability. Is just flicking that switch if it's not there already, and totally back up Emma's point before. Why just talk about universities? Let's talk about GCSE and A-level. Very key point.
Having gone through the journey myself, I would say, I studied physics at uni. I joined Barclays, spent my time in corporate finance, but I think green finance represents fantastic opportunities once you are in that job you want. Defined green finance roles are few and far between. What you need to do is bring sustainability into your role. So I had a placement within mortgages. What did I do? I went and launched a green mortgage, the UK High Street Bank's first green mortgage. I went into corporate banking. I led the launch of a corporate green banking suite. I was in Treasury. I helped to launch a green bond. So bringing your passion for environment into your day-to-day role, that is where you can really make a difference and still build that skill set that will be critical if you want to continue a career in green finance and banking.
Brilliant, thank you very much. I think it's now just turned 2 o'clock on the dot. So I'd just like again to say a huge thank you to Emma, Ian and David for that really insightful event that we've had today. I think there's myself included an awful lot more about sustainability and green finance, and look forward to having conversations with people that I speak to directly and hopefully influence them more with some of the things that I've learned today, that's for sure. So without further ado, I'd like to say thank you so much for your help work today. Thank you to all the participants. Thank you to the questionnaires. And thank you to Heather and Stuart, who've done a fantastic job in getting this up and running. And with that, I'd say thank you, goodbye, and see you again soon.
Thank you.